We're closing out another crazy week in the markets. Crypto went on a nice little pump. TradFi is taking a big old dump. We're going to be discussing all of that and more today on Money Never Sleeps.
I call bullshit.
Welcome back, everybody. As we get going today, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, we saw a pump in crypto overnight. People were getting real excited, acting like we were going to the moon. We saw ETH back over 1,600. Bitcoin, once again, got rejected at 30K, but it's still sitting at a nice number of 29.5K at the moment. All is not as well as it appears, in my opinion. I'm looking at some data today out of American Express with their earnings we'll talk about momentarily. We have OPEX day for TradFi, a lot of red across the board there. We see the Dow down just under 200 points, NASDAQ down 1%, S&P down almost a full percent. Those are all going to close in the red on the week in a fairly significant way, at least for TradFi. And then if we just scroll down, the only thing that I'm really seeing in the green today is Coinbase, just due to the fact that crypto is up. But even so, it's down a smaller amount than it would be if the rest of the market was doing well. So it's ugly for TradFi. Crypto is overly optimistic, in my opinion. But what are you looking at today? How are you feeling about the state of the market?
Man, I couldn't feel better in my positions than I do right now. Again, I'm not getting ahead of myself by any means because there is a shit ton of manipulation right now in crypto. I was up when Bitcoin pumped last night. It was like 3 or 4 o'clock in the morning for me. And I was just looking at this chart. I'm like, I can't go to bed. No, look at this bullshit. Look at this is ridiculous right now. I can't sleep. But
you gotta
yeah,
get
I was
some sleep, or you're gonna burn yourself out before the bull market comes back.
I thought this was the bull market. I thought this was the bull market, dude. That's what everyone on Twitter is fucking saying. I agree.
Well, everyone on Twitter is just dead ass wrong.
I agree. They're all a bunch of wrong sons of bitches. Unfortunately, this market is going to humble a lot of people in both directions, and I think that right now we are seeing desperation like crazy out of crypto. Let's get into crypto real quick, just because I think this is really important. Because we gotta just disprove anything that this is a bullish move. This is desperation 100%. I'm going to share with you Whale Alert, which is a Twitter account that I follow. They do a really good job at showing large whale transactions. And I just want you to see how much money is moving. I'm going to go to yesterday. Here it is. Now we're starting to see all these stable coins that are just moving onto the exchanges. But let's just start from here. Here's $50 million of Tether going to Binance. We got another 50 million. 50 million going to Binance, 50 million going to Binance. All 3 different transactions. Another 50, another 50. It's about 443 million dollars going to some unknown wallet, but that's on the Tron blockchain, so I know it's going somewhere. Then a bunch of it got burned. We're seeing tons of whale accounts just burning this. TUSD is worth nothing, in my opinion. I don't think there's actually any value to it that's backing it in terms of USD or any assets, cash assets. But we're seeing tons, another 50 million sent to Binance, 100 million sent to Binance in USDT, 110, 108, 67 million. Right here, we got 60 million going to Bitfinex, which is another questionable exchange, in my opinion. Then obviously going to the Tether Treasury, but there's huge, wallets moving a ton of money around. And this is something we need to be questioning, because there's one of 2 ways this plays out, in my opinion. One, we see Bitcoin, pump like crazy, right? And then it just liquidates a lot of people who are maybe super short on the market, because I think a lot of people are somewhat bearish on the market, at least institutional investors. And that just means that they have to add more to their positions not to get screwed over in a squeeze. So that's one thing. It could be adding liquidity to the system that way. Or the other thing, which I think is kind of showing this, their hand, the desperation, is they have nothing left and they're terrified of a bank run. I think a lot of these exchanges that are insolvent are really afraid of, Bitcoin's price going down, because once it goes down and people start withdrawing, then guess what? if they don't have the assets on hand, then they're insolvent. It's an FTX all over again. So I think what they're doing right now is they're trying to absorb all the liquidity, waiting for people to sell because they're anticipating a major sell-off. That's my hypothesis. That's what I think is going on. Because again, within all that I've shown you, we got right here $83 million worth of Bitcoin that's been thrown onto Coinbase. We got ETH that's being thrown onto Gate.io. We have I have to go down deeper, but for months it was just I talked about this all the time here. Another 80 million going to Coinbase, and it seems like Coinbase is where you go to get liquidity to get cash out. It's like an off ramp because you don't go to Binance to cash out. I don't think I wouldn't go that route personally, especially with everything that's going on. But it seems like they're just going to Coinbase. They're going to sell swap for USDC, get off, and then everyone takes their profits if they're selling that much supply at that given price point. But I think that this is this is Binance, this is Tron, this is Bitfinex, Huobi, any of these major exchanges. It's their last stand. They're just trying to absorb whatever supply is on the exchanges that's ready to sell, and they're going to try and keep the price elevated. I don't know if that's going to work out for them. I'm really curious to see how this plays out, but them minting that much money yesterday is an absolute red flag, and I'm actually kind of terrified to see how this plays out because it's going to be volatile in both directions, in my opinion.
All right, so that's what we got just kind of off the top for crypto. I want to talk about the American Express earnings because you and I have both been viewing, these credit card companies as a good indication of what is going on, some more realistic numbers around consumers. And, we're continuing to see some cracks in this whole story that the consumer is healthy, right? So I'm going to share a chart here in a second, some notes I took reading through it. They've seen the smallest growth in network volume in 10 quarters. So right off the bat, that's not very good. Small businesses and corporations are both reducing spending. However, they say that they're still positive on small businesses, despite the last 2 quarters being relatively slow. Well, guess what? That just seems like it's all lip service right there. Of course they're going to say that. What are they going to say? That no, small businesses are kind of fucked right now because rates are so high and you can't borrow money worth a goddamn thing and everyone ran through their PPP loans. No one's going to say that, even though it's the truth. They're also, like every other credit card company, setting aside more money because they're expecting delinquencies. So let me pull up now some of the charts that they shared in their presentation. Let me make sure I have the right page. Here we go. So if we're looking at this, we're seeing that, the 30 days plus past due. Pre-pandemic, it was at 1.5%. It's only at 1.2% now. It's been there for a few quarters. Okay, that's all well and good, but it is increasing. We also know that rates are going to stay higher for longer, and so we can anticipate that number making a move to the upside because people aren't going to magically be like, oh, student loans are back and interest rates are higher. Now I have more money to pay off my balance. That's not how this works, okay? That's not how this story ends. If we look at write-offs, pre-pandemic, 2.2% back in 2019. Now, with all, 2022, people still had money from the pandemic, from not traveling and not being able to spend money as much. That number has doubled in the past 2 quarters. Okay. So now we're at 1.8%. That number is going to keep going up. Let's look at the dollar number that they've had in write-offs. Back in Q1, 2022, 287 million. Now, 912 million. It's going to be $1 billion soon within the next quarter or two. So this is all just kind of connecting the dots as far as the fact that people are still spending, but they don't have the money to pay this shit off, or at least they have less and less money to pay it off. So to me, I'm still not bullish, and I don't get what people am I just stupid? Maybe that's the answer. Maybe I'm just not a very smart person and I don't know what I'm talking about. But when I look at all of these things, it doesn't make any fucking sense, Kevin. And so I have to go under the assumption that once again, the media knows that people only want to hear the headlines and they only want to hear the positive things and they don't want to dive in deeper into the numbers, because I can probably count on my 2 hands here how many people actually read through this presentation who talk about finance on a regular basis on Twitter and stuff to actually see what the numbers are telling them besides what the headline is, which is always going to be more on the bullish side of things.
Yeah, man. I mean, that's a really great breakdown, in my opinion. I didn't take a look at the Amex, but I've been taking a look at a lot of the other ones like Discover, and I was looking at past quarterly earnings and stuff like that. The thing that really is weird, it's not weird, but I think that they're spinning it in a way that seems like it's, better for these companies, is that there's more transactions, there's more balances for them, meaning people are using their cards more often. But that also lines up with how goods are going up in price and that people are just kind of continuing to lean on, credit nonstop. At some point, you can't do that anymore, right? And this kind of goes back in line with the banks and a lot of these other the issues that we're seeing, where it just comes that debt is coming. I was listening to Patrick Bet David, pretty smart guy at the markets, and he was talking about why smaller banks are pretty much fucked, and or not smaller banks, but smaller institutions, businesses are screwed, while the large corporations are doing okay. But the large corporations aren't safe from this. It's because back when rates were at 0%, the bigger banks and a lot of these other institutions that had a lot of the ability to borrow more borrowed at 0% or extremely low rates, so that when the interest is due, they don't have to pay an insane amount. They could always make more money and they have more money on hand. It was just a smart move for a lot of these people. Now these smaller institutions that are these corporations, these businesses that are don't necessarily have as much money on hand, we're going to start seeing a lot of delinquencies, a lot of defaults. Eventually we'll start seeing a lot of bankruptcies coming up. Well, that's the reason why. So there is a lot of money in the system, but as the rates continue to go up, as if the rates aren't going to be helping a lot of these creditors and these debtors at all, it's going to just absolutely impact everyone from high level institutions all the way down to retail. And right now retail is failing pretty bad, in my opinion. I think that we're in an extremely bad place for them to continue to lean on this. Eventually it's just going to be to the point where they've maxed out all their cards. They're relying on whatever last savings are. I mean, we can argue that they're already living paycheck to paycheck at this point too. It's not a great sign, and I don't think that any of the headlines that we're seeing with a lot of these credit card companies are painting the picture like you just did right now, that things are going to get a lot worse and debt is coming 100%.
As someone who shut down a small business at the end of last year because I saw the writing on the wall and I knew that it didn't make sense for me to re-up my lease, and that in my industry it wasn't financially viable to continue. It's going to keep happening. We know that a lot of commercial real estate leases are coming due next year. And if rates continue to be higher, a lot of those businesses are going to have to make the tough choice that they're going to have to close up shop. And that's not good for spending. That's not good for the economy. Another thing that caught my eye is the setup for the next housing crisis. So, one thing they mentioned in here on a positive note is that millennials and Gen Z are spending more than other demographics. And I'm just like, okay, so a lot of these people don't have homes don't own homes to begin with. We're seeing more and more houses being built. Eventually, a lot of the baby boomers are no longer going to have their homes, but the people who would be the ones to buy those aren't going to have the money to do so. And we are going to see, right now, there's no demand and no supply because no one wants to get a mortgage at 8% and no one wants to sell their home and have to bring on a new mortgage at 8% if they're at 3%. But eventually we're going to get to a point people are going to have to sell their homes, but there are going to be no fucking buyers. And so it's like, I don't know when this is going to happen. Maybe it's 3 years from now, maybe it's 5 years, maybe it's 2 years. But we're going to get to a point where people are going to be selling their homes, but no one is going to have the fucking money to buy it. And just like so many things are set up incredibly poorly right now.
I'll add to that unemployment rate. Once that goes up, that could be the catalyst for that, right? People can't afford to make payments on their homes. We get foreclosures. Whether they try and resell it, home prices are going to go down like crazy. So
I
if
heard
we
a really, really sad stat the other day that the homeless rate amongst people of retirement age is the highest since the Great Depression. That's just like
yeah, that's
fucking
fucked.
depressing, man. Like it's so bad out here, and we have such a wealth gap and so many people who are just in a shit situation and there's no light at the end of the tunnel, and it's going to lead to a lot of really bad things from a societal standpoint as well. So it's just like, if anyone is watching this and thinks that we enjoy being bearish, we don't. Like, it's just the reality of the situation. I wish things were better. I would love it if there wasn't such a huge discrepancy in income amongst people, that there was a better distribution of wealth, but there just isn't. And we can't change that. We can only do what's in our best interest to protect ourselves and our families and try to put out as much good information as possible. So yeah, the situation sucks, but I'm not in a position to, to magically snap my fingers and make it better. So we just need to do the best we can to deal with this shit situation. So that's kind of my last thoughts on that. From a TradFi standpoint, anything else that you're seeing? Once again, we are headed for probably, close to a 3% drop in the NASDAQ this week, even with those huge Netflix earnings. S&P down around 2%, Dow just under 2%. So it's ugly out there. Is there anything else you want to talk about on TradFi? And then we can go into crypto a little bit more.
Yeah, I'm going to pull up the 10 to 2-year yield curve right now because that's something that's, pretty important. I think it's a really good sign. It actually is a sign that recession is on the way. And where we are currently, if you guys can see this right here, this is the 10-year Treasury constant maturity minus the 2-year constant maturity. So pretty much just a yield curve. This is since the beginning of the data has it's been recorded. So all the way back to 1976. You can see these gray areas right here. They're the same as every time we look at a Fred chart. These are all recessions that occur. And we can look at a few of them in particular. So let's look at, 2000. We can see that it was inverted negative 0.47. And it wasn't until it started reverting towards zero that we started to get the recession. Recession came in March 2001. We bottomed in April of 2000. So that was roughly, 11 months or so before we started to enter a recession at that point. We could see here from 2008 that we bottomed out around negative 0.16, inverted in 2006, November. And by the time we hit December of 2007, so what is that, 12 months, 13 months, we are technically in a recession at that point. And then obviously the market collapse happened a little bit later. So these things aren't always super cut and, clear to the point where we can just say, oh, okay, it's going to come in so many months. That's something that we can usually rely on. But I don't think that's the case in this situation. Again, I think a lot of that has to do with how much liquidity was pumped into the system. There is no base case for where we are currently. We can always, reference 2008, 1929, 2000, 1972, anything that we really want to. We can always reference it, but there is no base case. This is the first time we're entering new territory at this point with how much money there is in the system. But this is the 10 to 2-year, recently. You can see that we started to invert back in July of 2022. Yeah, we were at zero then. And then we bottomed all the way down here at, where is it? Right here, negative 1.07. So the most it's been inverted in a substantial amount of time. You can see now the bad part is that we're starting to revert back to zero. And within the past few weeks, we looked at this roughly, I think it was when you were on vacation, me and House looked at it, it was at negative 0.37. And today we're sitting at negative 0.16. So it's getting close to zero once again. That's not a good sign. Again, if we zoom out and we take a look at this, we have not hit a recession yet. A technical one that's acknowledged by every single entity in the United States or globally. But this is a huge inversion. It was inverted significantly, and now we're starting to revert back to zero. And we know that once we start to revert, and we can see from the bottom, it plays out so that there's this, roughly 10 to 12 months afterwards, we get the recession. So what is this, June of 2023? We could see maybe next year, June, July, or May or so, we start to enter a recession. If that plays out this way, again, I think that there are some technicalities that would maybe make this a little bit different than other recessions. And again, I think that we could enter a recession after the markets collapse too. It's very possible, right? The market is not the economy. There's always some difference between the two. So we could always see delay, lags. The same thing we've seen with interest rates and how the markets have gone up with interest rates this entire year. So I think that there is a bit of discrepancy when it comes to that. But I think that we are heading towards a recession, one that's very different than what we've seen in the past. Obviously, last time we were this inverted would be April of 2000, to this magnitude, probably significantly, but we can even go back here to 80s and we can see that's, the lowest we went was -2 pretty much inversion. That was back in February of 1980 when rates were roughly 14% or something like that. So we're not in a good place. I think that there is a recession coming soon. This, the fact that it's just reverting back to zero very quickly. I mean, this is back in June, we were at negative 1.06. Today we're at negative 0.16. So this is happening faster than I think a lot of people are anticipating. I think that's we're also seeing a lot of things speed up in the world news and in the headlines. I think also, I'm just going to share gold and go in the TradFi from there. But there's a reason why people are flocking to gold. It's because of this, right? There's a lot of people that are seeing writings on the wall. I don't necessarily know if there's if people are flocking to gold because they're scared of what's going on globally in the Middle East and Ukraine, Russia, or if they're flocking to gold because they see, okay, things seem a little bit too frothy for how bad everything seems, financially, and not just the U.S. economy, but globally right now. We're seeing manufacturing drop in both the Philly and the New York State Feds down. That's not a good sign. That means that probably you're going to see a lot of unemployment picking up soon in some of those sectors. But right here with gold, 1981, it's up another $8 today. It's been on an absolute tear, right? I mean, from this bottom where we hit, what is that, 1812 to where we currently are, it's up 10.27%. And that's roughly what? Monday, October 20. No, that's wrong right there. It's Friday, October 6th. So from October 6th to where we are today, October 20th, we've shot up 10% in gold. I don't know. That just screams, there's a lot of people that are trying to leave the system. They're afraid that equities might be getting close to something bad. We're seeing that treasuries and the bond markets, collapsing. That's why the yields continue to go up. People are definitely flocking out of the system, in my opinion. I think a lot of smart money is moving to gold because they're afraid. They want to be risk off right now, and precious metals might be the way to go. I don't know, but it doesn't seem like everything is peachy in that regards, looking at the reversion of the 10 to 2 year yield curve.
Okay. Anything else chart wise? We can keep it high level today.
Absolutely.
We're seeing, like I said, it's a lot of red out there, but let's keep it to the actionable stuff.
Yeah, S&P 4250, we're below it. We're at 4234. We said that this was a key level of support. If we lost it, then we're going to probably see a lot of the machines selling on a lot of these trading desks. We filled that gap, and now we're going back below the 200 EMA and the 50 moving average. Continuing closes below that, obviously, there's a little bit of a gap down here, which was filled. I think that we're going to start seeing, if we start seeing closes below this, that's a bad sign, right? So I'll just leave it at that. The NASDAQ, right? It's in this ascending triangle right now. Hit our head here, ass here, head here, ass here, head here. Look like we're going to try and hit our ass one more time. We got the 200 EMA getting close to it. If we're not able to hold that support here on this yellow line or this 200 moving average, then we're probably going to continue going down. It's going to be really interesting to see how this one plays out. But again, tech bleeding significantly here. And then the Dow is going to get a death cross, it seems, unless it's able to bounce from here, maybe come Monday morning. I don't know if that's the case. OPEX, I thought that it would be a little bit quieter of a day to close the week out. We're not getting that. It's pretty red. I think people are getting out of the markets, or maybe they're just cutting their losses. It would be really interesting to see how the market opens up Monday. It's very different out there today. It doesn't seem right in a lot of ways. And we'll take a look at the VIX and the dollar real quick before crypto. But yeah, we're getting rejected here. The death cross is a lot closer than people anticipate for the Dow. We could rally one more time. We could find resistance here, but it seems like this resistance at 34,347, which has been key for us for months. We've been talking about it. It looks like that's going to be holding unless something crazy happens that gets investors bullish and people start buying. VIX, this thing shot up and it closed above 21 yesterday, I believe. It was 2140 at the high, closed at 2140. So it closed at the high yesterday, and today we see that it's pulling back a little bit. It's down 1.54%, which doesn't make a lot of sense considering that the S&P is down, 1.04%. We'll keep an eye on this to see how this plays out, but we got a golden cross coming in the next few days as long as we're able to sustain some of this height up here. Could it pull back one more time? Sure, absolutely. But I do think that we are getting to a point where, if the S&P is volatile here in the next coming weeks, we could start seeing this thing push up into the mid-20s, maybe even test 30 at some point. Again, the daily is overbought, but again, this really is very much like Bitcoin dominance. It relies on the S&P, and that's price action. So we'll be really interested to see how that plays out after, markets close today, going into next week. dollar's consolidating here. I'm waiting for the Euro USD pair to drop, and I'm waiting also for the yen to hit 150. It's very close for both, but the dollar's just going sideways kind of into the end of the week, which is very, very interesting considering people are starting to be a little bit risk off here, in my opinion, especially selling in the markets. This should be going up. So what I'm seeing here is probably either we are consolidating, waiting for the next leg up, or we're going to get a fake out where it comes down here, finds support, and then it pushes up, or we could just go straight up Monday morning. So it's a really interesting place where we are in this market. The dollar honestly should be reacting more positively. I know it's had a really good run here, but on the daily stochastic RSI, there's plenty of room to the upside, and our resistance is not very far, right? It's 107.2, 107.19 or something like that. We could easily go up there. That's what? less than a percentage to go up. It's 0.92%. So I'm going to keep an eye on this. I think this is being held down here. We're going to see how this plays out going into next week, but we're still in a pretty good range right now. We're between support and resistance, and we've back tested this and it's held the support. So I think that there's a better chance we're going to test the resistance before we test support once again. That's it for TradFi. Other than Netflix, we're going to see this one move after OPEX. This is 100% just helping a lot of people who had contracts that we're expecting the price to go up. So maybe they're taking profit here. They're executing some of those contracts, but I anticipate this to play out more so going into next week and the week after. This could just stay kind of above this range for the next, 30 minutes as the markets close.
All right. That sounds good. Need to wrap it here momentarily. I am on
Absolutely.
dad duty and my kiddo just woke up. Great timing on his part.
No worries. Bitcoin, we talked about all that money coming onto the exchanges. We still are watching this head and shoulders play out. Again, it went to 30,200 or something like that today, got rejected. We're back in this parallel channel. And again, this parallel channel is going to break. And I think this is what's going to help us finish this right shoulder. That would take us to 25K roughly. And that would be testing that huge level of support that we've had for a long time. But again, I think that our targets are closer to this 20 to 21,000 range around here. And then if we lose that, then obviously, 19K, 19.6 is probably going to be a huge level for us to hold, which is right here. We tested it back in March during the collapse, and then it's also been a huge level back here earlier in the year, last year. So that's pretty much what I'm seeing. Bitcoin dominance, once again, 52.41 was a lot higher earlier. I think this thing's going to continue to climb even if Bitcoin sells off. So we'll keep an eye on that. And then USDT dominance is dropping here. So you can definitely see that they're using some of those stables that they didn't really want to, but that's how they're pushing up the price in the market. So be cautious with crypto. I think that there is liquidations back and forth that are going to happen going into this weekend, but all it takes is one thing to change, and then the markets could absolutely go on a run. And I'm talking about a bank run here for exchanges. And Bitcoin gets to 20,000, people are going to start selling and taking their money off the exchanges. You'll see which ones are solving from there. But that's all you need to keep an eye on. This is a really wild day in the market. It's very weird. I think that Monday is going to be really interesting. It could be bloody, it could be quiet. It's going
to be a crazy. So I was looking at it real quick before we wrap. We get Q3 GDP later in the week. We get Friday personal income, personal spending, and PCE, the last data points before the Fed meeting. And then on the earnings front, we got Microsoft, Google, Amazon, Facebook, Visa, MasterCard. Like there's a lot going on next week.
Perfect storm.
And we don't know what's going to happen. Like, I'm curious, we haven't seen much movement here at the end of the day today, but I'm wondering how many people are really going to feel comfortable holding positions through the weekend when we have no idea what's, escalations in the Middle East. Like, it's a really crazy time. So be careful out there, everybody. We'll be back next week, Monday through Friday, covering all of it with you. So appreciate everyone for watching. If you have not yet, do us a solid, like, subscribe, comment, share us out on social, all that good stuff. Stay safe out there, and we'll see you next week.
Take care, everyone.